Facebook and when it comes to this technology use. I don't fault you for what your tool has become because I do believe it is a tool. I want to explore that a little bit, but first, my question is: what share of Calibra is Facebook? I know it's an association. I'm sorry, of Libra is Facebook. So it's an association that you've referenced. I mean, do you own half of it? Is it equal shares among all the partners? David Marcus, who had been at Facebook, is heading up Calibra. Is it one and the same? Is Calibra Facebook?
Okay, Congressman, there are two organizations here. There's the Independent Libra Association.
Yep, that's what I'm wanting to get to know.
Which is a nonprofit, so it's not a for-profit entity that there's ownership.
So how does the voting, here's what I'm trying to get at. How does the voting go? Is it what David Marcus says? Is it what Facebook says? Or is it you can be overruled by others in the association?
That's correct. Right now, there are 21 companies and nonprofits. There are a lot more that want to join. Each company and nonprofit organization that's a member has one vote in electing the board. Right now, there are 5 board members. David Marcus is one of the board members, but is not running Calibra.
Well, he's been here. In fact, sat where you sat.
Sorry, I just misspoke. He's not running Libra. He is running Calibra, which is Facebook's payment subsidiary. But we are looking for the Libra Association is recruiting an independent director. And David is not even on the search committee for that.
Okay, so here's I asked him the question because it had been put forward that Switzerland was where you were going to domicile this. Or the association was going to domicile. He had said that he had been talking to the Swiss regulators. The Swiss regulators said that he hadn't been talking to them and that the association hadn't been talking to them. So I'd like you to clarify that. Have you been talking to the Swiss regulators?
Congressman, yes. And the misunderstanding there was that I believe that he and the team had been working with the primary Swiss financial regulator, FINMA, and now we're also working with the data regulator, which is going to be relevant.
You say that you've worked with 30 different jurisdictions in examining this. Can you provide us with a list of the regulators that you have talked to?
Congressman, I can get back to you with the full list.
That'd be great. That's all I want. It's not a trick question. Just want to know that. I'd also like to know which U.S. regulators you have been talking to.
Congressman, are you asking about me personally or our team?
Well, I mean, you use the royal we on page 3 of your testimony. I'm assuming it's not you specifically. I'm assuming it's you and your team. But I want to know who Facebook and Calibra and Libra have all been talking to in the U.S., because I think one of the questions that I have is why Switzerland and why not the U.S. a little bit about as the ranking member had started to go down there. And I want to move quickly on that, though. But will you give me a list of those U.S. regulators?
Yes.
Okay, great. Thank you. All right. Here's the real crux. You said that you won't launch without U.S. regulator approval. What happens if the association decides to launch despite that?
Congressman, then I believe we would be forced to leave the association. I would hope that that the association will weigh our recommendation and what we say publicly that we think should happen. But if at the end of the day we don't receive the clearances that we feel like we need to move forward, and the association chooses to move forward without us, then we will be in a position where we will not be a part of the association.
My remaining 30 seconds here. As I said, I believe Facebook is a tool. I believe cryptocurrency and Libra is a tool. I believe all technology is a tool. It's a neutral tool, just like a car, a plane, a gun, a knife, all of which have been used at weapons for nefarious things at times, and all of things that have been used to benefit. These various tools are in society, though, regulated. And, whether it's Ms. Wagner's, concern and all of our concern about child sexual exploitation or others, you need to help us understand where the line between people's First Amendment rights, yours, mine, all of society's lie, and the safety of our society, regardless of the platform or tool. So I'd like to continue that conversation at some point.
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Mr. Zuckerberg, thank you for joining us today. Back during the 1960s and 70s, Congress passed a series of laws intended to stamp out discrimination in lending and housing. And both Republicans and Democrats in Congress worked together and passed legislation like the Reinvestment Act and the Fair Housing Act and the Equal Credit Opportunity Act. All of these laws were designed to target and stop discrimination in the sale and advertising of housing, and in particularly redlining. Redlining is a series of practices of cordoning off certain groups of people by race, by geographic area, and systematically refusing to lend to those communities. And we're even suffering right today from the aftershock of these practices. Now, it is my understanding, Mr. Zuckerberg, that Facebook allows advertisers to target their messages to certain users or groups of users, both directly by identifying their race, their gender, or age, but also by indirectly targeting their education, their interests, their location, their income. And in its investigation, HUD, our federal housing agency, found that your platform allowed advertisers to restrict certain users from viewing ads on your platform. And you have even enabled the practice of this dreaded redlining of certain communities, restricting them from housing and employment opportunities. You were charged with this by our federal agency that protects our housing and lending laws. And Mr. Zuckerberg, we in Congress have worked hard for the past 50 years to eliminate the very racial discrimination practices that your platform is guilty of. On your platform, you screen for and you prevent all sorts of criminal activities, such as sex trafficking, drug trafficking. Even as you mentioned a few minutes ago, you outlaw payday lending, terrorism, illegal drugs. Why don't you prevent redlining, which is also illegal and criminal as well?
Congressman, we do now. Our policies have always been to that discrimination is not allowed. We recently entered into a settlement with civil rights groups, ACLU and others, and FHA to remove certain categories from our targeting, including age, gender, and zip code.
You say to remove.
It's implemented.
You haven't said we have removed. There's a difference.
My understanding is this is already implemented. If I'm incorrect on that, I will get back to you quickly and update you. But my understanding is that is already in effect.
But Mr. Zuckerman, I have here HUD's report, and it clearly says that your platform allows advertisers to restrict certain users from viewing ads on your platform, and you have even enabled the practice of redlining certain communities. What is your answer? What was your response to HUD? Have you put things in practice to eliminate this?
Well, Congressman, I think at the beginning of the discussion with HUD and some of these groups that I just referenced, we entered into a settlement with the civil rights groups to create a new standard where we block that kind of targeting. And I think it's worth noting that the standard that we set is industry leading. Right? I don't think any of the other internet platforms restrict the kind of targeting that we do for these categories, but I think that doing so helps us uphold the principles around preventing discrimination. So I'm happy and supportive and glad that we're doing that.
Thank you, Mr. Zuckerberg.
The gentleman from Ohio, Mr. Stivers, is recognized for 5 minutes.
Thank you, Madam Chair. Appreciate you holding this hearing. Mr. Zuckerberg, good morning. How are you?
I'm doing okay.
I understand. That was honest. Thank you. First, I want to say I appreciate innovation, and we need innovation in America. No innovation is going to be perfect. And to the questions that the gentleman was just asking, I want to let you maybe clarify a little bit. If I want to advertise housing on Facebook today, can I use age, sex, and zip code to target people today as we sit here?
Congressman, I believe the answer to that is no.
Thank you.
Thank you. I'm right on this? All right, just confirmed with my team as well that is
so that you cannot do that today, and
yes, those options are no longer in the system for housing, employment, or credit opportunities advertising.
And nobody wants to redline, and I'm sure that was accidental, but I want to talk about Calibra a little bit because I am concerned about the establishment of a private currency which is used for transactions because I think it does undermine other currencies in the world. There's 195 countries, 2 of them are sovereign countries, 2 don't have currencies, so 193 countries that you are opening yourselves up to regulation from. Why not just pick another currency? You can, the Facebook, you're going to make money through the transmission of of whatever it is. It's not about what currency. Why did you think you had to create a private currency? And I guess I would ask you to maybe go back to your folks and think about whether the pain you're going to have in creating a private currency is worth it. But why create a private currency? Why not just pick a currency and use that as part of your payment system?
Sure. Thanks, Congressman. The goal of Libra is to build a global payment system rather than a currency. Because it is global in nature, we figured that it might be better to not solely rely on one country's currency. But because we're an American company and because the American economy is the strongest in the world, it makes sense for any reserve to be primarily US dollars and extend America's financial leadership in that way. But like you're saying, we clearly have not locked down exactly how this is going to work yet. I personally am much more focused on being able to help innovate and build a global payment system than I am in any specific makeup of what a currency or reserve might look like. And I think that there's already some discussion about whether it might make sense to build the kind of digital payment system that we're talking about based on individual sovereign currencies rather than a kind of combined or combination of these currencies into some new one. So that's something that's already being considered.
Great, and I think you'll find that the Bank Secrecy Act, anti-money laundering, all those things are going to be really hard with the digital currency, and so ultimately you may find a sovereign country that creates a digital currency that you could then use, or you could do it based on several stable currencies around the world. If you're in Europe, you can pick one, and in the Americas, you can pick one, whatever. But there are a lot of people around the world who need what you're talking about, this cross-border opportunity to efficiently send money back and forth in countries where there's no stable currency. Think about Venezuela for a second. The Venezuelan bolivar is worth nothing, and it's worth less now than it was just a second ago. So there are countries where there is no stable currency, and there are millions of people in the world who are hoping that your innovation works. But I think you may have bitten off more than you can chew by trying to create a private currency. So I would ask you, and I know you're already relooking at it, but I hope you'll think about that, because you can make a difference, and frankly, you can have a payment system without creating that private currency. And I think you'll find that the compliance with the individual laws, whether it's anti-money laundering, Bank Secrecy Act, sanctions, all those things will be easier to do if you use an existing sovereign currency. So I would just ask you to think about that. You can comment if you want to, but I wanted to use my time to ask you to think about those things.
Congressman, thank you. I think that those discussions, my understanding, are already happening. Some of them are happening publicly. I think that there have been some public comments on this. And I just want to reaffirm what you're saying about how this could be valuable to people around the world. Right? We serve more than 2 billion people around the world. We serve a lot of people in the United States, but there aren't 2 billion people here. So most of the people we serve are in countries that have developing economies that I think could really benefit from this.
Thank you.
Gentleman from Texas, Mr. Green, who's also the chair. For the Subcommittee on Oversight and Investigations, is recognized for 5 minutes.
Thank you, Madam Chair. I thank the ranking member as well. Thank the witness for being here today. Sir, is it true that the Libra Association oversees the Libra project?
Congressman, yes.
And is it true that global corporations make up the association?
Congressman, the association is made of, today, 21 companies and nonprofit organizations as well.
Of the 21, how many are headed by women?
Congressman, I do not know the answer to that off the top of my head, but I can get it for you.
Well, I believe you can get it, Mr. Zuckerberg, but one would assume that you would know who heads these corporations that are going to be running this global company. How many of them are minorities, Mr. Zuckerberg?
Congressman, I do not know off the top of my head.
Are there any members of the LGBTQ plus community associated with this association, Mr. Zuckerberg?
Congressman, I don't know the answer.
Who acknowledge? There are many people who acknowledge that they are a part of the community.
Sorry?
You do not know. Mr. Zuckerberg, is it true that the overwhelming majority of persons associated with this endeavor are white men?
Congressman, I don't know off the top of my head the list of the people who are running the organizations in the association.
Is it true that one would have to have $10 million to become a part, aside from other qualities, to become a part of the association?
Congressman, I believe that was the initial idea, but I don't think that has been locked down yet.
Well, isn't it true that persons have already bought into the association and paid $10 million?
Congressman, I do not believe that has happened yet.
Well, I spoke to your person who manages Colibra, and he indicated that he is one of the holders of a post with the association. Is he incorrect?
Congressman, you're right that David Marcus, who runs the Colibra subsidiary for Facebook, is Facebook's delegate to this independent association. The question that I was answering is, I don't know if the organizations that are members of the association have yet contributed any financial support for the organization.
Well, I must say that I would assume that you would have the answers, but I would greatly appreciate it if you would share this with me, because I plan to share it with the public. The public needs to know whether this is an organization that is truly diverse or whether it is an organization that is owned and operated by a small group of persons, all of whom have similar characteristics, for want of better terminology. Now, let me share this with you quickly. This does not apply to you, Mr. Zuckerberg, but you need to know why there's a good deal of consternation. There was a man whose name was Bernie Madoff. Mr. Bernie Madoff was the chair of the NASDAQ. He had all of the trappings of being a successful, responsible person. He's now serving 150 years in prison. His Ponzi scheme involved some $64.8 billion. The people who are for free markets bought into this Ponzi scheme. They were laissez-faire. But once they lost their money, they made their way to us. And they wanted us to make them whole. This is why we have to be concerned, not because you're a Bernie Madoff. I want the press to clearly understand I'm not saying this, that you are, but because things can happen. Things can go wrong, and when they do, we are the people who have to make them right. I yield back the balance of my time, Madam Chair. Thank you.
The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Mr. Zuckerberg, welcome to the Financial Services Committee. Criticism is cheap. Anybody can criticize. As you can see here today, politicians in Washington are pretty good at lodging criticism, but creating something of value is significantly more difficult. And I would commend you for being an innovator and trying to create something of value. It seems like in Washington, whenever the private sector produces some type of innovation or new advancement, politicians and bureaucrats rush in to criticize or regulate. In an era when some politicians in Washington and even some politicians on this committee are openly embracing socialism and central planning, it seems like the presumption is always that private sector innovation is a bad thing. I think that presumption should be reversed. We in Congress should view innovation for its potential opportunities in promoting financial inclusion, reducing friction in transactions, aiding small business, and bringing the financial system to unbanked and underbanked communities. That's not to say we shouldn't ask questions, which is of course what we're doing here today. But in America, a country built on free enterprise and capitalism, it's always better to be on the side of innovation, and we should always place the burden on the government to justify regulation and intervention. Now, I was very interested in your testimony, Mr. Zuckerberg, when you alluded to the risks of not innovating and the danger of the U.S. falling behind some other countries or foreign companies who are creating similar platforms. Will you elaborate on the initiatives in those other countries?
Yes, Congressman, thanks for the opportunity. Today, as soon as we put out this white paper on Libra, what we saw was in China especially, they immediately kicked off this public-private partnership with some of their biggest companies in order to race to try to build a system like this quickly, a digital renminbi that they could use as part of their Belt and Road initiative, their kind of foreign and economic policy to grow influence throughout Asia and Africa and other areas. And they're planning on launching this in the next few months.
Well, I would say, when I think AML/BSA issues is important when we're talking about Libra and Calibra, but I think the American competitiveness angle and the competition with China is a national security issue, and the fact that Facebook and the Libra Association is launching into innovation, I think, is positive for our national security. Mr. Zuckerberg, I do want to commend you on statements you made recently at Georgetown University about free speech and the First Amendment. I was particularly happy to hear you say that you will, quote, continue to stand for free expression, understanding its messiness, but believing that the long journey towards greater progress requires confronting ideas that challenge us. I'm reminded of what John Stuart Mill wrote on liberty, and I would commend it to my colleagues and my friend, the chairwoman. Mr. Mill wrote that, quote, if all mankind minus one were of one opinion, and only one person of the contrary opinion, mankind would be no more justified in silencing that one person than he, if he had the power, would be justified in silencing mankind. And this sentiment is important and relevant to Facebook, especially in today's age of political correctness, accusations of offensive speech, safe places, and the dramatic polarization of our political discourse. I do find it highly troubling that politicians are trying to bully you to be a fact checker. and to be the speech police, especially in politics, at the core of the First Amendment. And so along those lines, I want to ask you a question about censorship and whatever fact-checking board you're delegating these responsibilities to. Will you commit that Facebook will not censor any political ad placed on your platform or in support of President Donald Trump?
Congressman, my commitment on this is that, or the principle at least here, is that we believe that people should be able to see for themselves what politicians are saying. That doesn't just go for Trump, that goes for any of the candidates for any of our national offices. People need to be able to see for themselves and be able to make judgments on what the candidates are saying and their character.
Well, I applaud you for that. And I don't want you to be bullied by politicians to relinquish our treasured free speech under the First Amendment. Protect it. And don't be bullied by politicians who want to censor politically incorrect speech. I yield back.
The gentleman from Missouri, Mr. Cleaver, who is also the chair for the Subcommittee on National Security, International Development and Monetary Policy, is recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Mr. Zuckerberg, for being here today. In response to a letter that I sent to FSOC, I was told that it's unclear whether U.S. and foreign regulators will have the ability to monitor Libra and require any kind of corrective actions. And then at the same time, if U.S. and international regulators are, as they've said in my letter, or the letter to me, unaware if they have the ability to monitor your network and then protect against money laundering and terror financing, I don't. How are you going to get over the regulatory hurdles? I mean, if they're already saying that, and what happens if regulators just throw up their hands and say that we cannot guarantee the soundness of this product?
Thank you, Congressman. So there are two parts of the process here. The first is what we and the rest of the association are trying to do to design the system so that it eliminates those risks. And the second is the process of working with the regulator on their concerns and questions to make sure it meets approval. On the former, the key part of this is that the system will be fully backed and one-to-one in the reserve by a mix of cash and highly liquid assets. So that sets it in contrast to the way that most banks work with a fractional reserve, where there could be a run on the bank if a lot of people want to withdraw from that system. Here, everything will be backed one-to-one. So in theory, that shouldn't be possible. Now, in practice, I get that sometimes there are additional risks beyond what the theory says should be possible. So we need to work with the regulator to work through their questions and concerns and make sure that we are operating at the highest level of rigor for financial stability. And that's why my commitment is that we're not going to launch the Libra payment system here or anywhere else around the world until we get the approval from FSOC and the other relevant U.S. financial regulators.
Yeah, I was pleased to hear you say that. Now, there is a mechanism that you've talked about that you wanted to roll out, or I guess you already begun to do that, which would be some kind of a review mechanism. Can you share that? A review mechanism that would, in some ways, tell you, an independent group would tell you what they believe to be violations of human rights that end up in Facebook and so forth.
Thank you, Congressman. I believe you're talking about the issues around content and hate speech and areas like that. Yes. So this has been an area where our principle is we want to give people as much voice and as wide a definition of freedom of expression as possible. But of course, there are going to be some things that infringe on others' rights or can cause harm. And one of the things that we've struggled with is how do you develop a nuanced set of policies that can identify all of the different types of harms. We've talked about a number today, including terrorism and child exploitation and aspects of hate speech or health misinformation or there's about 20 different categories that we track all in, and we develop policies. We now have more than 35,000 people at the company who work on safety and security overall. We spend billions of dollars a year on this. Our budget on safety and security is now greater than the whole revenue of our company was at the time that we went public in 2012. So it's a big effort. But nonetheless, I believe that it should not sit on any one company's shoulders to make so many important decisions about speech. So one of the things that I've tried to focus on doing is building an independent oversight board that will consist of people with diverse backgrounds and views and is global, but who all value freedom of expression. And this group will be able to make final binding decisions on what content stays up and comes down on Facebook that even I or our team won't be able to overrule. So it'll create a check and balance and oversight of our company's operations.
How do you extricate yourself from that body that you would be created?
Congressman, the way we are setting this up is so that we will appoint the first set of co-chairs for the body, and we hope to do this in the next few months. And then they will nominate a set of other members, and we will jointly agree on them. Once the board is up and running, it will nominate and refill itself. So we will not be involved in the selection process after that.
Thank you. Thank you, Madam Chair.
The gentleman from Colorado, Mr. Tipton, is recognized for 5 minutes.
Thank you, Madam Chair. Mr. Zuckerberg, a number of my colleagues I'm over here to your left.
There you go.
Okay. But they've expressed some consideration that needs to be taken in regards of the prospective payments industry within the Libra Association. As you're well aware, a number of businesses that have had extensive experience in international payments, MasterCard, Visa, have pulled out of that association. Would you view Facebook as an expert in the payments industry?
Congressman, we're not traditionally primarily a payments company, but the person who's running the Calibra subsidiary for us, David Marcus, was president of PayPal before, which is one of the great payments companies. And we certainly have other financial experts on the management team and board of the company.
You'd also noted in your testimony today that you're going to be looking for U.S. regulatory approval in terms of AML, BSA, to be able to make sure that Facebook, for its part, within the association, will continue to participate. If the Libra Association can't satisfy those regulations with the U.S. regulations are in place, will Calibra pull out of the association?
Congressman, the short answer would be yes. If we don't come up with a solution that gets the U.S. regulatory approval, then presumably we'll continue working on the proposal until we can, but we're not going to launch anything that doesn't have U.S. regulatory approval.
So the wallet portion of this you would pull out?
Sorry, I didn't hear that.
You would pull out on the wallet portion of this?
All right, we've been watching the Facebook founder and CEO Mark Zuckerberg testifying on Capitol Hill for the better part of a couple hours now. We're going to continue to monitor that, of course. Let me welcome all of you to the Halftime Report. I'm Scott Wapner, and front and center this hour, the earnings read-through. More major companies reporting today. Several stocks are moving. We'll discuss which ones you should own and which you should avoid. It's 12 noon. You know what that means. This is the Halftime Report.
A big miss for Boeing, and Cat's earnings getting crushed, but both stocks holding up. What it's signaling and the next move for your money. Mark Zuckerberg grilled on Capitol Hill. Facebook shares down 10% in the past 3 months. The risks facing the stock. All in on Apple. 2 big price hikes. One of them a new street high. It's our call of the day. Microsoft earnings after the bell. The stock outperforming all the FANGs over the past 1 year. The traders take their positions. Halftime Report starts right now.
It's good to have you with us on this Wednesday. Our investment committee at the table today, Joe Terranova, Stephanie Link, the brothers Nigerian alongside. We're going to monitor Facebook, as we said, the hearing going on the Hill. There's Mr. Zuckerberg, who continues to testify. We'll get to that in a minute. We do want to begin with the markets. Another very big day for earnings. Some key Dow components are front and center today. Steph, we go to you first. You own Caterpillar. They cut guidance. China story, right? This is about weak demand in China. Is that how you look at it?
Well, it is, but it's nothing they said today was surprising at all, actually. And I think if you look at the sell side and buy side earnings estimates, they're around $11. So the low end, or the midpoint rather, of the new guidance is about $10.48. So it's not that much off, if you will. They actually destocked $1.2 billion of inventory in a year's time. That is huge. And I think that makes the setup for production increases for 2020 much, much better. So I like the risk reward here. And the stock reaction is telling you everything you need to know.
You hear Kramer this morning? You hear Jim this morning said it's a tough stock to own.
It is a tough stock to own. It's not easy when numbers are coming down and you have it's all about China and the global growth, and that has been slowing down. But that's not surprising. The stock is trading on the new numbers at 11 times forward estimates. It's giving you a 2.8% dividend yield. This is a quality company with a good balance sheet. So, again, the stock reaction is telling you bad news is already priced in.
You guys don't agree, though. No one else owns it. That says a lot, does it not?
I don't own it, but I thought that they had a lot of good things to say on the call, Scott. So, to Steph's point, I think that it certainly looks brighter on the horizon than it has looking back over the last 6 months. What I heard him say was that stimulus that China is now applying is going to manifest itself next year in 2020. That was a very positive projection, and something I think that with sales in China down 8% year over year, because that's what the numbers showed, they made up for that with a lot of big sales in North America, in Latin America, and Brazil and so forth. But if China does come back because of the stimulus being offered, Judge, that's very bullish for these guys.
Well, the retail sales numbers for September also accelerated 200 basis points. That came out this morning as well, and that is also very positive, or at least the momentum is going in the right direction.
I think that when you're looking at this one, Caterpillar, I mean, obviously the stimulus you're talking about, John, and everything, that all makes total sense. And why do I not own it right now? I think at some point I'm going to probably be back in Cat.
Well, it's an underperformer.
I'll tell you why I'm not in a hurry to grab it right now, though, is I still think this is tied to trade war. Obviously, we all know that. I mean, we look at the Asian numbers, and that's pretty easy read through. But the reality is, if you believe that the trade war will get, at some point or another, we'll see some sort of an agreement here, then this is one of those stocks, Scott, that I think absolutely has unbelievable upside.
But let me ask you this.
I just think that's further out than everybody probably still perceives it to be. I don't see
when
that.
When you get a resolution, though, this stock is going to be 20 points higher.
In the next day, yeah, but I just don't think in the next couple weeks, maybe not even the next couple months, do I see this scenario playing out.
Why hasn't the move in this stock reflected the overall optimism about, even if it's incremental in trade, that has pushed the market within 1% of its highs? Caterpillar hasn't done anything. It's a colossal disappointment this year.
It's up 17% from its August lows. I mean, it certainly has underperformed year to date, but there are points and pockets in time when you want to own this thing. And I think August it got way oversold. And I still think based on where the numbers are shaking out right now, you're talking about a very, very cheap stock. You have to own some hard stocks to make money, right? I mean, you don't want to be all in where everybody's at. So this
I know, but there are others you own that you don't want to pull all your hair out, right? I mean,
or you'll look like Doc. You look like us.
GE is like
GE. I'm actually
at some point
position in GE. I actually have my cost basis is right here.
I know, I hear you. All right, what about Boeing? How do you read Boeing, which you own as well? Obviously the MAX is the story.
Yeah.
There's the stock chart today, which suggests that keeping the timeline intact for the MAX remains the most important thing at this point.
100%. 100%. They get this thing in the air, the stock is going to be a lot higher. And in the meantime, it's not as cheap as Caterpillar, to be honest with you, at 18 times forward, but cash flow is the key. And 2020, it sets up for a better cash flow year. Almost like $32 a share in free cash flow next year is what I'm expecting. And that's very attractive.
Yeah. How about Honeywell? Joe, they raised their guidance today. Sales a little short. CEO, double-digit bookings gains in China, Middle East, Latin America. Europe was up nearly double digits. I'm reading what the CEO said from Honeywell on the call. Nearly up double digits for us as well in countries like Germany and the UK. This is one of your favorite industrial stocks.
Very strong message, but yes, I did sell the stock last week, and I'm fine that I did sell it. 178 was the high back in July. We're talking about a stock right now, pricing somewhere around 169.5. I think this industrial conversation is a very interesting conversation as it relates to the overall marketplace. I've used the term, I believe the equities market is a coiled spring. I think the industrials market and names like Caterpillar and Boeing are giving evidence to that. Nothing changed in Caterpillar's report. Inventory glut, Asia's bad, mining, oil and gas is lousy. We knew that in July with Caterpillar, but yet the response to the stock, it's telling you that bad news is now priced in the industrial space.
You think about buying it back
even with Boeing. I'm not going to buy Caterpillar, and I'll tell you why.
Honeywell. Talking about Honeywell.
No, I'm not going to buy Honeywell, and I'll tell you why. Because there are opportunities that I'm finding in the industrial sector that I was not able to find previously 6 to 12 months ago. So I love the housing theme. How about an industrial contributor to the housing theme, which is Masco? They're going to report. I've been in Cintas. You want to buy a stock that missed, that's fundamentally strong? Take a look at Waste Management. Go get Waste Management at 116. That's been a stock over the last year that's been incredibly resilient in the industrial space. So there's other areas of the industrials, finally, where I think you could find opportunity. I think that lends a very positive message overall for the market. And I think it offers you a little bit of distinction to wait for the Caterpillars and the Boeings to rightfully come back. They will.
Okay, let me look at another stock that missed, and they guided well below estimates too. And that's Texas Instruments. I want to kick this one around. Pete, I'm going to come to you first on this. On pace for its worst day in a year.
Yeah.
Okay.
And
There it is now. I mean, it's a little bit off the worst of the session too, but that's getting ripped.
And really, honestly, Scott, what it comes down to is the guidance that they gave was absolutely awful, right? I mean, that was it. But look at where their exposure. Now, there are times where you want to be in Texas Instruments because of their exposure, and there are times where you don't want to be. Right now, this is a company that's got autos, it's got industrials, It's got all of that, and that is something that they've got to deal with, and they've got to be able to navigate that themselves. And I think people are looking at that thinking, again, this is another one of those with the industrials. We just were talking about that. Any kind of deal, any kind of movement to the positive, this is going to be very bullish for Texas. I'll give you a little teaser if you want. I got a name in the semi space that I'm going to be doing for unusual activity later on that's not Texas Instrument, but has a lot more different ways that it's exposed, and it's much more towards what people are doing with themselves, with the phones and everything else.
So Pete makes a good point, and one that Kramer was making too, is that don't look at Texan as a read-through for what's happening in the chip space. They're in difficult businesses right now, whether it's autos or some of the other areas.
And too often we do that, Scott. I'll give you a good example of last week real quick. FedEx last week. Everybody wants to say, hey, FedEx, oh boy, that's a barometer of everything that's going on. UPS came out, boy, it didn't seem like they had the exact same deal, did it? Completely different. It's how you're navigating, and I think sometimes we overread some of these and we say, you know what, this is a barometer for everything out there, and that was a great example. This is a company that's much more focused. They've done a much better job of the transition of where they are right now, UPS I'm talking about, versus their competitor in FDX. Just take a look at those charts.
Jim said, don't look at this for the read-through. Look at Teradyne. Well, a name like that.
Yeah.
They're the ones that are up sharply today. And you can go ahead and sell some of the names. You can sell on Semi. You can sell NXPI if you don't like what Texan
NXPI
delivered. We'll get to that in just a second. But the idea of Teradyne, which you've talked about.
I've owned Teradyne. I gave that one away way too soon. But that's the equipment story. And that's, I think, what the semis right now are about. I think we've talked about in the last couple of months that we wanted the exposure to semi equipments. It's about the logistics. It's about the potential for 5G. That's where the opportunity source is. So Teradyne, that has just been a masterful winner. You're going to get another semi equipment name, which I am long. You're going to get the report for Lam Research. Now, that's front end semi equipment, but I would expect you're going to see continued strength, both fundamentally and technically there. And I'll tell you that on a pullback, I would add and buy more.
Jim also said, don't sell AMD. If you do, shame on you. Right? I mean, there's maybe a thought. You look at a Texas Instruments and you say, okay, I'm going to take
all my
this name out, take that name out, take that name out.
It's a mistake.
And he's like, whoa,
Jim was just to do that. Just as great rains.
Pete said about, don't throw the baby out with the bathwater, more or less. This one, Teradyne did exactly the opposite of Texas Instruments. They both beat, on the profit side, but then Teradyne beat on the sales side. Texas Instruments missed. Teradyne gave positive guidance, very positive guidance. Texas Instruments offered horrible guidance. They cut it by like 20%, Scott. So again, those are two companies going in opposite directions right now. Doesn't mean that Texas Instruments is a no-touch. Doesn't mean that. But it means, you're probably going to see a few days of pressure on this one before it can make a comeback. As far as AMD, data centers, and all the rest, AMD is still doing a great job, and with Apple.
To Kramer's point about the NXPI and you should sell it, it's down 3 1/3%. Steph, tell me why you bought it today.
Well, I mean, they made an acquisition, so you have synergies from that. I think that there's upside to margins given their cost structure. They're buying back stock. They just increased their buyback program. It trades at 12 times forward estimates, and I think those estimates have been, for the most part, de-risked. Look, I think part of Texas Instruments' issue is that it was kind of a safe haven, and a lot of people were hiding in the name. They do have a very diversified end market. Yeah, they have auto and industrial exposure, but they also have a lot of other end markets that are doing just fine. They never took down the write down from Huawei. No, they actually built inventory over the last 3 quarters instead of reducing it like some of their competitors. So I think there are some specifics to Texan that I don't necessarily think you want to extrapolate as saying auto is horrible, industrial is horrible. I think that there are pockets where you can make some money.
SMH up 38% year to date, even with some of this, follow through today on some of the bad news that we got from Texan and, some of the other movers. We still like chips?
I do. Yeah, I think there are certain names, and obviously today we're talking about very specific names. But
aside from individual names, would you buy the SMH?
No.
I wouldn't either.
Why?
But I don't ever.
Because I want to be specific. I want the equipment names. Now,
I just gave you 39% year to date. That's pretty darn good.
Okay, and there was a time earlier this year where I owned the SMH. Many on the desk owned it, and that was the time to buy it. I think right now it's at a point where you want to be selective, you want to be specific, you want the equipment names. I understand Taiwan Semi is a big component of the SMH, but I'd rather just own TSM, Taiwan Semi, than the SMH.
Okay. We told you we were monitoring the hearing going on Capitol Hill. The Facebook founder, CEO Mark Zuckerberg continues to testify there. Our Ilan Moy is in Washington, as you would expect, and she is with us right now. Hi, Ilan.
Hi, Scott. Well, that hearing is in a brief recess after Mark Zuckerberg testified for about 2 hours on just about every single piece of bad news that's been in the headlines over the past few months. Election security, privacy, competition, political speech, housing, diversity, all of these issues were front and center. Now, on the main topic of the day, which is Libra, lawmakers on both sides of the aisle sounded pretty skeptical and said that they did not trust that Facebook could get this right. Here is Republican Congresswoman Ann Wagner.
Why have they departed? I just wrote scores of stable partners have dropped out. Why?
Well, Congresswoman, I think you'd have to ask them specifically for.
Why do you think they dropped out?
I think because it's a risky project, and I think that there's been a lot of scrutiny.
Yes, it's a risky project.
Zuckerberg said later that he would be willing to leave the Libra Association if it did not get clearance from U.S. regulators. But he said that he hoped the cryptocurrency would still be able to move forward. And he framed this as a race with China. He said that if Facebook and if Libra delays, China will move ahead and America could potentially lose its place as the global financial innovator. I'm told that Mark Zuckerberg has now re-entered the room and the testimony is now continuing. So we'll bring you the latest when we have it, Scott.
Appreciate that, Ilan. Thank you. That's Ilan Moy outside the hearing room in D.C. Let's stay with the FANG trade right now because who's this?
Katie Huberty. God, she's good.
What'd she do today?
She might have bumped up Apple just a little bit.
Street high.
Street high.
289.
Yeah.
289. Morgan Stanley's Katie Huberty did just that today. Traded out another all-time high today.
Yep. And she talks about the Apple TV Plus. She's going into that whole world and how much that could mean for them going forward. Not anytime really immediately, Scott, but yes, part of 2020, but even into 21, all the way up to 25. She's got a great vision, and this is very similar to the same vision she had long ago when we talked about services, when they were nothing. And now all of a sudden, they're 21% and growing, and they're taking a bigger and bigger piece of the pie with a lot better margins for Apple, so that's going to be something good. But then you bring up the wearables, which is also another 10% of what their revenues are as well. So when you look at what Apple's doing, and we talk about it all the time, it's the verticals. And this just plays right into the whole verticals idea, Scott, where the TV will add that much more. And you know what? They can spend the money. We know about the cash flows. One of the things that I thought was interesting, I've never looked at the stock in this particular way, but she talked about when you add the dividend with the buybacks, you're looking at an 8% yielder on Apple. That's a pretty big number when you look at what we're looking at now, and we talk about the 10-year, we talk about all these different bonds, all the rest of this stuff. That's something that's very significant, and they're going to continue to do that. They're going to continue to buy back, and eventually, I would guess they're going to continue to also raise up that dividend itself.
How about when they did that deal with Roku, Scott? Roku was on its backside, and it's slipped here and there since then, but that deal with Roku, basically distribution of Apple and its products through the Roku platform, this is going to be huge, I think. And I think it'll be actually very positive for both of these companies. That's what the stocks are telling me right now, both stocks. So I really like what they did there. Much like, well, I don't know exactly how much because it's not been expressed how much the Verizon deal with Disney will end up costing to give 12 months away to all these Verizon users. But I really like the Roku move a lot for Apple.
Have you been to the Fifth Avenue store yet? Because it's all about customer retention and it's about the service. I was in there yesterday afternoon, had to replace an iPad, sat there, looked at all the products. I'll buy that, I'll buy this. You're out of there in 30 minutes. Every product is offered. I looked at the watch. To me, that's what Apple is about. Its ability to retain its customer. I believe the retention rate is somewhere around 92%. Okay. Maybe you're not going to innovate if that's what Stephen Weiss thinks about the company. We all disagree with that.
Is he going to call in?
We may disagree with that. Okay, but I'll tell you what. While they're waiting to innovate, the rest of us will just sit there and we'll wait. We're not going to leave and go somewhere else. And I think that's the remarkable story about this company.
289 is not too...
That's a big number. Well, Gene... I will tell you this, Gene Munster, we talk about all the time.
It's not like she hasn't been cautious in the fact. I mean, she hasn't,
right.
She hasn't nailed it the whole time.
No, but she's been pretty daggone good, and she's not jumped off the ship either, Scott. When she has shifted down her price target, she's brought it down very mildly. This is a pretty big jump from where she was to this 289 level.
Too optimistic or no?
I don't think so. No, I think so. Especially if you want to, people will eventually start pricing this company differently. And I know you've brought this up many times, Steph. A lot of people have talked about this when we're talking about Apple. Is it a hardware company or what is Apple? Where do you categorize Apple going forward? And I think that changes the dynamic a lot. That's why 289 is not that high.
Yeah, Bernstein, Sakanagi goes to 225, reiterates the market perform. Let's talk some other things. Steph, Alphabet price target goes to 1,700 from 1,500 at Credit Suisse.
Yeah, I mean, I actually recently have been trimming Twitter and also Facebook. Had great gains in both of them. And Alphabet, I was underweight. So actually, I covered it, and I'm now long. I just like the risk-reward into the quarter. I mean, I think there's still a lot of skeptics out there about visibility and about execution. And they've got a great product, that we know. So I just think they don't have to get much right for the stock to actually continue to work.
You mentioned Twitter. Let me jump to, we ready to Julia Boorstin? Guys, we good for that? Let's go to Julia Boorstin on Twitter. She has something, and we'll come back and talk on the other side. Hey, Julia.
Yes, that's right, Scott. Twitter falling to session lows ahead of its earnings tomorrow before the bell. Now, Twitter's move lower, continuing its downward trend this month, comes as social media stocks are very much in focus. Of course, Mark Zuckerberg testifying on Capitol Hill about Facebook's efforts to launch its cryptocurrency, but he also has been pressed on a number of issues that would also affect Twitter, such as their responsibility for content on the platform and election security, as well as political advertising. Snap shares, it's worth noting, looking at Snap, they're also down about 5.5% this morning after yesterday the company reported better than expected top and bottom line results. But that move lower reflects the fact that Snap's guidance for the fourth quarter was lower than analysts had been anticipating. Now, coming up tomorrow when Twitter reports before the bell, not only will their user growth be in focus, but there also will be questions about what they have to say about all of the political scrutiny of Twitter and whether or not any of these talks about regulation will be impacting the company. So that's certainly an area to watch. Guys, back over to you.
Okay, Julia, we appreciate that. That's Julia Boorstin for us. We're talking about Alphabet. Steph had mentioned Twitter. What about Alphabet? That price target, 1,700.
Doesn't seem out of reach. It seems like, Alphabet is certainly one of the stocks that we talk about a lot here, Scott, but not one that I've owned.
Another $500.
Well, there's a different. There's
not one that I've owned for a long time.
There's a paradigm shift, and that's they're finally doing what many have called for them to do, which is the Apple model of going back and aggressively buying back their stock. It's something that over the last couple of years, Alphabet really has been deficient in that capital allocation strategy relative to an Apple. But now they're getting aggressive with it. And if that works, it'll gain momentum both technically and fundamentally.
What about Steph?
It's really lagged, too.
It has.
It really has. Only up 20% year to date. Well, it's actually on the screen right now. Yeah, to my point.
What about Amazon? Price target, bumped a little bit, $30 over at BMO. Just to finish the FANG trade.
I mean, I still like it. I trimmed a little bit. It's not as big of a position for me, but I still think that, the retail piece is great. The cloud business is still great and on fire. And so I'm holding it as a kind of a long-term secular story. But, it's a very small position for me relative to where it has been.
Amazon, Doc, Amazon?
I've not been there enough, so I kick myself for that all the time, Scott. But I've never been a guy who's been a full believer in the whole deal, because I look at it as AWS, but I don't. The e-commerce side of it, the margins just aren't there for me. So oftentimes I've actually taken advantage of the fact that when they go into somebody else's category, they immediately will push down that category, and I think that's always ended up being a buy at that time.
Reporting tomorrow, it's remarkable to me how out of the headline, the business headline, Amazon now is in terms of stock performance. I don't think the expectations are there. Its market cap is below $1 trillion now, and as I've stated before, the prior 4 quarters, the stock has not responded positively to whatever the earnings were. So it's almost as if we've dismissed Amazon from a conversation when it was preeminent in all our conversations, top of show all the time. That's not going to. Well,
the interesting thing will be at Microsoft and see what Microsoft says they're doing versus them in terms of the wars that they've got going on there. Because if they start eating away a little bit more, Scott, that's the margin business. That's the only margin business Amazon has. So because of that, that's something to keep very close eye on.
Okay, we're going to take a quick break. Here's what else is coming up on the halftime report.
Just hours after Under Armour, Nike also announcing a major shakeup at the top, naming a new CEO. What it means for the stock from here. Plus, we want to hear from you. Send us your questions at cnbc.com/halftime or tweet us using the hashtag AskHalftime. The desk is answering them straight ahead. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, discover and reshape markets, and embrace the possibilities of data that will reimagine our potential and transform society as we know it. With new ideas and new technology, get there with NASDAQ.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
There's no shortage of rich and famous that became broke and bankrupt. I know exactly what it's like to hit rock bottom.
One mistake changed my entire life.
I was on the #1 show in the world.
I distrusted people.
But my money went like that.
I did. I didn't know what I would water here.
It's not my fault.
Enough with the excuses. This is a fresh start. You've worked too hard. You've taken too many damn punches. How you come back matters. That's going to be your second act.
Back in the Game. Series premiere November 6th, 10 Eastern. CNBC. Get yours.
Attention. The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-548-2837. That's 1-800-548-2837 now.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. President Trump making a statement from the White House on what he's calling the big success along the Turkey-Syria border. He says he is lifting economic sanctions against Turkey after Ankara informed the U.S. it will make the 5-day ceasefire in Syria permanent.
By the moves that we've made, we're achieving a much more peaceful and stable area between Turkey and Syria, including a 20-mile wide safe zone.
Laura Cooper, the acting Deputy Secretary of Defense for Russia, Ukraine, and Eurasia, arriving on Capitol Hill this morning for her closed-door testimony. The New York Times reporting Ukraine official knew about the U.S. aid freeze before it became public, undermining a key argument in President Trump's impeachment defense. And Walmart says its Christmas sales are starting earlier than ever this year. The sales will begin October 25th at 12 a.m. Eastern Time on Walmart.com. It will sell 500 exclusive toys, 20% more than a year ago, and they also have free next-day delivery. And it's not even Thanksgiving. That's the news update, Scott. Back to you.
October 25th?
October 25th. I know. No pressure. No pressure.
Guess not. Sue, thanks. Sue Herrera. Our next guest isn't quite ready to get bullish on stocks despite an earnings season which hasn't been as bad as feared. Mike Wilson is Morgan Stanley's chief U.S. equity strategist. He's back with us today on set. Is that accurate? You're not ready to feel so good yet?
We're not quite there yet. We're getting there. Look,
what's the problem? You do admit that we're not as bad as feared, right?
Well, no, that's where we probably will have a debate, right? So the earnings story is clear. Okay, so let's go through some numbers there first, which is S&P 500 earnings will be probably down 4 or 5% third quarter, maybe a little better, down 3%. But really,
they're down a little less than 3 right now.
Yeah, right. Well, they're tracking.
Let's say 3.
Whatever, 3. Fine. But the bigger story is in the S&P 1000, right? So mid-small caps are down almost double digits, 3 quarters in a row. And we can agree that the engine of jobs growth in this country is small and medium businesses. Okay, is that fair? Can we agree on that?
Sure.
Right. So our call has been all along that the risk of a recession is predicated on a labor cycle. And my concern continues to be if this doesn't improve for small mid-cap companies, then they are going to have to start laying people off. So we don't know the answer to that yet, but I think to say that risk is behind us is premature. So first of all, the market has rallied a lot in the last couple of months on a lot of good news. We've had, Fed cutting rates. We've had a lot of monetary stimulus, which is good. We've had a Brexit progress. We've had a trade deal progress. And we're back at the top end of the range. So I don't see any reason why we're going to break out here. It's the same setup we had this summer. Earnings season is going to be mixed. You guys were just talking about there's definitely mixed earnings out there. And until that mid-small cap area in particular starts to show some improvement, I think the risk of a employment cycle is elevated.
So I want you to listen to what Josh Brown said the other day about the market as a whole. And I want to react to it on the other side. I think it's relevant to this conversation. Here's Josh Brown.
Small cap stocks, they were the fly in the ointment just a month ago, up 4.5% in 7 trading sessions. Transports on a massive tear since the lower end of the range. And now the banks, Joe is right, I'm long JP Morgan, absolute wildebeest. Take a look at Bank of America at the upper end of its range. When you have banks working, more new highs for the ITB, by the way, home builders. You've got all of these things happening. I know the rhetoric is negative, but price is not paying attention to those things. Price wants higher, small caps working, transports working, banks working. These were the things that we said we needed. Now you have them. What are you going to tell me now, tough guy? What's wrong now?
No, he's not speaking to you directly as tough guy, but he's speaking to people like you who are throwing shade on this market.
Well, what we're saying is that the risk reward is still not great, right? So I would put it back to Josh. Hey, Josh, I've owned 20-year Treasury bonds. I've destroyed stocks over the last year and a half. Small caps have underperformed large caps significantly. We're long utilities, we're long staples, and we're long financials because we think that's an early cycle group that could start to work. And our equity portfolio has outperformed the S&P 500 by 1,300 basis points in the last year. So don't tell me that being set up that way has been the wrong way. And until I see evidence, beyond just a few weeks of relative performance, I think it's premature. I think it's premature.
You've largely been right. I mean, we've given you props on the calls that you've made and how they've come to fruition. But I'm going to borrow a line from you and say, maybe the time to still be negative. This is not the time to be negative. That was many months ago. That was the time. Now's the time to say, okay, maybe this is evidence that things have troughed and that we are back working our way back up. You mentioned we've got maybe a Brexit resolution, more optimism on China trade. We know about all the negatives that are out there. Maybe now's the time to get a little more bullish.
Well, I think the time to get bullish was in August, right? Because you were at the low end of the range. So once again, we're not that bearish. It's not like last year where the Fed was tightening rates and we thought we were going to 2,400. We've been saying 2,700. That's the low end of the range now. So we are incrementally more constructive on a potential recovery next year. Once again, I still think it's premature to think that we can break out of this range in a meaningful way and it's going to be led by cyclical stocks in a sustainable fashion. So I respect the market more than anybody. I agree with Josh in many senses that you have to listen to the market. And we look at a lot of different things. He picked on 3 or 4 things that are positive. I could tell you
a lot of things.
Well, I could pick on 3 or 4 things that are still telling somewhat negative, right? If things were really about to cyclically gear up, you would see rates actually accelerating a lot more than they already have. We're still at 170, 175. That's not a great outlook for growth.
No, but relative to where they were not that long ago?
Of course, come on. Of course. But it's starting. And so that's why we're at 3,000, Scott. That's why we have traded to the top end of the range. So I don't want to get boxed into a corner saying we're always negative. That's not true. We've been positive on many things within the equity market.
I didn't say you were always negative.
But that's the genre here of that we have to break out now. And I think the reality is we have to digest these gains we've just had. Let's see the evidence come in through the earnings season. Let's see if there actually is a deal, not just a phase 1 agreement, but there's a deal. Let's see if we get some of that stuff. Let's see if we have some more evidence that we have enough to punch through into 2020.
That's fair. I mean, with good reason to be skeptical, no?
No.
I mean, the market has been in this range. We've asked the question week after week after week after week, what's going to get stocks to break out of their range? There's been no ability to do that. So what changes it to get somebody like Mike Wilson to change maybe his overall view?
Well, I would focus on profit margins, and I guess the question would be that they've been incredibly resilient. What would be your outlook there? And do you think that continued resilience and even an acceleration, which would be surprising, I think, to all of us, maybe takes your bull case scenario a little bit higher?
Yeah, I think that's exactly what we're looking for. So on the earnings side, the reason why earnings have been disappointing is because we have negative operating leverage. Right. So we have actually positive sales growth still in the economy. We have small mid-cap companies delivering 3, 4, 5% top line, but actually seeing 10% negative earnings growth. So until we start to see companies get ahead of the cost issue, right? And to be honest, what's going to sound ironic, if I saw companies start firing people, I would get more positive. Right. Because that is what's going to protect profit margins into next year. So that's exactly that's the thing I'm looking for, right? In other words, I'm rooting for a recession in some ways because that's what will get the flush in terms of expectations that still has to happen, and then we can have a cyclical recovery.
What about the ISMs? Do you think we're close to the bottom there?
Of course we're closer, obviously, because we've had such a decline. All of our leading indicators on the ISM suggest that we could still go lower, okay? And once again, I'm still very focused on the labor market. That's the only thing that's separating us from the ISMs going lower or not going lower. And I don't have enough evidence yet, Stephanie, to say that I know that things are going to trough here and start to reaccelerate. If we were trading,
you don't have as much evidence either to suggest that things are going to get as bad as you say they might.
Well, I'm not saying they're going to get that much worse. I'm saying what's priced is that's not what's priced anymore. Okay, at 2,700, when cyclicals were really falling out of bed, and we had that conversation back in August, that was some of the stuff that I was looking to buy. We said actually we should be selling software in the high growth stocks then. That's happened now. That's good. The market is taking out some of the high flyers. But I think the cyclical stocks now are starting to price in a better recovery. I do think at 3,000 in the S&P where we are today is no longer pricing in a continued deceleration of the PMIs. It's actually anticipating some recovery. And that's all I'm saying. It's just you got to look at price and the fundamentals.
So I got you. But if they're looking for a recovery, rates are moving up, why stay with the staples trade and utilities and these bond proxies, which have been so in favor that would likely fall out under that scenario?
But that's why we have financials on the other side, right? So we do have a barbell of some kind where we are putting a leg into one group of the cyclicals, which is financials. Because I think the earnings situation is actually better there, and in other cases, they do have a handle on costs. And then the second thing is that I do think rates ultimately will make a move higher. So I think it's premature for things like materials and energy and some of the industrial areas, just from what we heard from some of the companies overnight, particularly TI, which is a very broad view on that. So, and by the way, I'm still not sold on the whole trade deal argument. As a firm, we're still not sold that there's meaningful progress having been made here as a truce. But I want to see more progress that we're actually going to roll back.
Nobody's going to fault you for having that view.
Yeah, I agree. I think people most agree with
where we've been over the last year at least. Pete, you got something?
Yeah, it's about the time frame, right? I mean, when you're talking about the trade war, so that was something I brought up earlier was I don't expect it to happen anytime really soon. I think this is something that eventually, and probably for political reasons as well, probably gets pushed off and pushed off and pushed off. How do we navigate through that time frame? That's the difficult part. If, let's say it's 6 months out, is navigating. You brought up the three categories where you're looking. Is that where you'd stay, or is there anything out there that you'd say, you know what, we're pretty daggone close on this particular world, whether it's tech or semis or whatever it might be?
Well, what we've been doing is we've been buying Japan and Europe. So we allocate globally, and actually Japan and Europe have begun to really outperform the U.S. Because we do think, and this is, people have been making the call growth to value. Well, we made that call a year ago, but with a little twist. Our call was that it was not going to be the cyclical parts of value that would work, but the defensive cohorts. And that now what we're getting is growth actually is underperforming value. It's not that value is outperforming growth. It's that the growth stocks are finally getting clipped. And that's why value is starting to outperform on a relative basis. I think this is really important. We are secular bulls, to be clear. We think global reflation is going to make a return next year once we do have a further slowdown. There's fiscal stimulus. We get past the election. Rates do finally recover because the Fed cuts a few more times. Okay, we get things going. We think the leverage, the real value opportunity in the world is in Japan, it's in Europe, in parts of emerging markets. That's the stuff that's really been thrown away. And that would include the cyclical parts of the United States equity market, not the darlings that have kind of led. So the thing we really got to be careful about getting too bearish is not so much that we're underweight growth, it's that we're underweight, we're underweight cyclicals, and we have too much exposure in defenses because rates will eventually make a move higher. So we're aware of this.
That's what I mean.
That's why we're barbell, Scott. That's why
we
we own
too
financials
much exposure to the
and
defensives.
Well, we have both. And it's not like we don't own any growth stocks, right? We're fully invested across the equity market. We have to skew in certain areas.
I'm saying you shouldn't. I'm saying what you just said, that the risk is you got to be careful.
Agreed.
Playing that trade the way that it's going to continue to work the way it has.
Agreed.
Last question to you, the Fed. What if the Fed does this pause? What if they pause? They don't cut rates.
Well, I think if they pause, that means something's changed. That means that there's
for the better, right?
Exactly. So I think if they pause, that means they probably got better data on the ISMs in early November, or they have evidence that there's going to be better data there. There's going to be better employment data of some kind. I think their meetings before all those come out, but something would have had to have changed that would make them feel better about the economic outlook. And by the way, we'll change at that point. We haven't seen it yet. So, we're all ears on that. We're not, we're not heads in the sand on the data points.
Didn't think you were. Good having you here.
Thanks for having me.
All right, Morgan Stanley's Mike Wilson. All right, first Under Armour down